Okay, I'll get this started now. It's ECB day today, following the Fed yesterday. The reaction to the expected 25 basis point rate hike by the ECB, it's kind of been taken in stride. The market has marked down German rates by almost 10 basis points in the 2-year, and that's why the euro has come under pressure. It's come under pressure versus not only the dollar, but also it's lost ground to sterling and the other currencies such as the Canadian dollar and the Aussie dollar, and definitely dollar yen at the end. So euro is under pressure here. The only thing we had, and this is why news matters and you just have to be on guard right here, as they were trying to push against a second time against 110 the euro. Lagarde came out and said, she ruled out, she said, we are not pausing. That caused a spike up here. We failed. We actually formed a ladder to the downside, but to be quite frank, all I've done so far is scalping from a different account. This account here, which I'll put up later, is I call it strictly AT. So what's the risk here? Well, following the logic of what I showed you the other day, and we'll look at euro dollar right now because that is the currency that is leading after the ECB. You have to ask yourself, where are the stops most at risk? And like everywhere else in this market, very hard to change gears. But if you look at, let's take an hour chart, for example. We failed. If I go to a 4-hour chart, hold on. We failed to take out last week's high. We really have a double top over here. So at this point, all we could say is the high for the day is likely in. That means when the euro attempts to rally, go back to a 15-minute chart. When the euro attempts to rally, it's not running into any stops. The only stops you'll see above the high of the day. So therefore, at least, even if you're trading from the long side, which a lot of people probably are, you got to look to take your profit at some point because you're not running into any of the blue amazing trader lines, closest ones being here that would take out stops. So then you look at the other side. If you want to take a side that's more at risk for stops being run, it's the downside. And what does that tell you? At this point, not much other than if you had to take a side that's most at risk, it would be this side over here. Because the market can get down in this area here, it's going to run stops. So how do you trade it? Well, you can go two ways here. In this case, I'm only looking at a 15-minute chart. We have an unconfirmed line here. So there's potential for a directional indicator, but one that's dependent on this level holding. So we'll find out as we sit here where that's confirmed. And if so, we put a stop below here, knowing that this side is still more at risk because if there are any stops in the market, they're not on the upside, they're on the downside. Now, if we look at other currencies here, for example, here's the Canadian dollar. And I've been looking at this one very closely and actually was looking to go short against this line, but we did break this line over here, which in fact took my attention away from here because it was, I guess you can make a case it was the preceding line. So whatever the case, Canadian dollar, then you also have the Aussie dollar. Another one that seems to be benefiting. Let's look at the Aussie. It's kind of a mess. Looks like it's going down. But here's your low of the day, and it's got support. So we know the Aussie dollar low is in for the day. We know the Canadian dollar high is in for the day. The pound is just going sideways, so we're going to forget about the pound. Dollar yen. Dollar yen's reacting again to lower interest rates and weaker stocks, and is again pushed this downside. So again, in dollar yen, likely the high is in for the day. The low is just tested. and that one I can chase after. So I have a couple, I've narrowed it down here. I'm going to look at the euro again. And the euro is still clinging to potential for a directional indicator. One dependent on how European interest rates react. So let's go down to the way I look at the market. I look at the market a very simple way. I want to know where the risk is. I want to know whether my trade, when I put on a trade, whether I have to get out at the next tick, or I'm putting on the side where stops are most at risk. But the only trade I have here right now, unless I went on to a 5-minute euro dollar chart, which is indicating pressure on the downside, although we do have two red lines over here. So we could look over here and see if this is going to be a directional indicator. Let's see what's under the market here. Under the market, we don't have any really key support to way into the 109s. So we're not going to run to stop, but if we do take out 100, 110, we are going to run stops. So here we have a potential directional indicator. So I'll just set this up here. But as I said, using my logic, I'd much rather be trading from the short side now than the long side. But I'm going to put this up anyway, just in case. And you can see here why we do not trade off of unconfirmed lines. We just took out that unconfirmed line, so we are not having a directional indicator. The trade here, which I do not have on, is 3 ladders to the downside in a 5-minute chart. So again, we had a setup in the euro dollar to go long. We had an unconfirmed line. That unconfirmed line has been taken out, so we do not have a directional indicator, which is kind of consistent with what I was saying is identify the side of the market to trade. Side of the market is where we are most at risk of stops being run. But the market can sniff out stops, is going to run them. And just as an aside, tomorrow we have non-farm payroll coming out. Market's looking for 180,000, which is below, far below last month's number. Although I saw Goldman Sachs yesterday upgrade its forecast from 225K to 250K after the ADP report. So just keep that in mind. Okay, now we're looking at the euro dollar. Failed to have a directional indicator, going down near where the risk is. And this is kind of a make or break trade. Either you buy against 110 or you wait for it to go through it and then maybe take a shot once you go through it if they do run stops. But this kind of confirms what I've been saying, that the downside is at risk because that's where the stops are. No more stops on the upside means rallies are destined to fail. But to be honest, during this period over here, Lagarde was speaking, and I was not looking to trade during her remarks, but you can see what happened. One remark here sent this market up over 50 pips. So whether I put on a trade during this hour webinar or not is really dependent on the market price action, but proof of concept, and that's something I'm going to be emphasizing, repeating consistently with anyone who tunes in, and I'll be doing these webinars through the beginning of next week, is the market risk, and that's what we use the high and low, is whether the high is in or the low is in. I would say just before the ECB decision, the high was at risk. Following the decision, based on the price action, the low was at risk. So here we have a choice. We could trade for double bottom here. We could wait for a directional indicator. Knowing that key stops are not until the low of the week, which is 109.40 or so. But there could be some day stops below here if the market can smell them and go after them. And that's the way I look at trading. The double bottoms by themselves, unless you have something behind it, like a good old AT line, are not reasons to go long or short. Right now, we almost have a double bottom here. And to me, that's the only trade I see on the board right now. I feel much more confident if we had a directional indicator here rather than a double bottom. You ever have a day when your finger is pressed on the execute button, but your gut tells you and the logic of my approach tells me, don't chase it. And I'm telling you, if you take this approach, well, I guess somebody played a double bottom. but it wasn't me. If you stick with my approach, you'll find yourself trading on the stronger side of the market, where moves in that direction are likely to lack follow through, unless you can take out a key AT line. But now we have a battle here at 110. Okay, I just went long against the low of the day, and we'll see if the low of the day holds, recognizing that it is more at risk. Not at a great level, by the way. I just changed my mind. I'm going to scratch this trade. Okay, I just scratched it. I made a couple of pips, and I'll explain why in a second. We'll see shortly whether this was a good decision. Or sometimes you get too cute. It just would have worked out very nicely. Very nicely, actually. In this case, I was looking at German interest rates, which were falling sharply. And every time that's happened today, the euro is sold off. So when I saw that combined with my entry level, based on this double bottom here, almost a triple bottom, really, double bottom, I closed it out. Which maybe is a lesson. Don't override 18. And for what it's worth, my game plan was to buy it back and get long at a better level. Had the market follow what it was doing all day, which was selling euro every time interest rates and German interest rates went down, and they're still going down, by the way. But that correlation stopped working. Which brings up a point. Good idea, lousy execution, but I'll get it next time. But the point is that when there are no more stops to run, and there should have been stops below here, but they weren't, and there are no more stops to run, the market will look to prove the other side. Let's see where my take profit would have been on this. Take profit would have been at 110.27.3. I would have hit my target right over here. So tells you a good lesson not to override AT and believe in it. This was a case where German rates continue to fall. They're at 2.54% right now versus almost 2.69 right before the ECB. And that's sometimes the case of knowing too much. So what's the key takeaway here? Key takeaway, market couldn't make a run at the upside because there were no stops to run. So the market reversed direction, came down here. Looked like it should have been vulnerable. I would say 8 times out of 10, market would have run stops down here. But apparently there were no stops, and there are no stops left to run. Market heads in the other direction. Here's dollar yen. It's now extended its low below 134 as interest rates fall across the board. Dollar Canada, steady. Actually have a directional indicator here. Let's take a look. Not on the 15-minute. In this case, I'm only looking at the 15-minute for directional indicator. Was he? $15 actually bearish here. Take profit would be not only below this line, be below this line as well. So I'll just come back and look at that later. And here's the euro back into neutral. Well, you ever see this? You can just reload your template. Interesting. Hold on. Okay. When you look at a double, the question is, when you see a double bottom, when do you know to buy and when do you know or sell, or when do you know to sit back or trade for a breakout? And the question is, you really don't know. I guess in the euro dollars case, and I gone to a little bit of a drill down, you've seen there would be no key stops below the market. So this probably would have been a buy area if they could have taken it out. But all you're seeing here is, let's go across the 1 hour chart as well. You're taking out so many lines here that this was really, it was vulnerable. As I said, 8 out of 10 times, this level would probably be taken out. Maybe 7 out of 10. And why I was hesitant to go long in the first place. And even when I went long, which was not at a good level, had been at a good level, I would have been more comfortable. I think it was the level that I got in made me a little bit antsy. But the idea was right. The timing was not bad. So more important to have the right idea. As again, looking back at the way interest rates are going, I have no regrets about getting out. But a double bottom, that's like a make or break time. If you can find a AT line below that, an old AT line that gives you some confidence that it's not going to race too far to the downside or upside, then you could put it in. Okay, so let's just look ahead to Friday. It's been a very choppy week. One where those with big positions, for example, those who have been all bulled up from the euro, had to trim down today. And that's seen other currencies gain against the euro, especially dollar yen. And I think that Japan's been closed this week. And in the old days, when they were closed, just as a side, used to the dollar yen would go bid as importers buy when they come back. So just look out for that Monday. But right now, dollar yen is reacting to lower global interest rates, the US and Europe. And that is pressuring that currency to the downside. And euro's still not going anywhere. So if you want to look, I'm going to cut this short here. If you're looking ahead to next week, I mean, actually to Friday, just keep an eye on US jobs and whether, the ADP report came out Wednesday. It usually does not correlate with non-farm payroll that comes out 2 days later on Friday. But I just noted when I heard Goldman Sachs, was not always right, raised their estimate to 250 from 225 when the market's looking at 180. We could have some fireworks tomorrow. And that's really it. Just keep asking yourself, are the high and low in for the day? If the high is in, then upticks are going to lack follow through. The low is in, downticks are going to lack follow through. In this case, we hit a double bottom and we got that bounce, but it hasn't gone that far. So that's really it for today. Good idea, poor execution. And the reason I put that trade on was I call it a bet in this case, that this double bottom would hold. I'm adding this addendum after the webinar just to show you that the Eurodollar ran stops below 110 as German interest rates continued to fall. That was the reason I got out of that trade. Turned out prematurely given the price action, but in the end, it was a right decision. And as I pointed out in the webinar, the side most at risk was on the downside. And after 3 tries, they finally got stops below it.